First idea, Choice Properties REIT, anchored by Loblaw. You already talked to us about this, but remind us on your thesis.
Yeah, so I've divided my picks into kind of a core, value, and income, and this would be my core holding. Because of this grocery-anchored and Loblaws, one of our more successful chains, of course, also meaning Shoppers Drug Mart and other brands. This is a real opportunity to have the stability in the market. So we see this as a core holding and one that anyone could hold and keep for 10 years and not have to worry about this name, as it is able to continue to grow. Now, it is a diversified name in that it also has industrial properties and industrial lands ready for development. At certain times, it's going to be time to develop these. Others, they'll just sit on the land, and that's fine. But it's nice that they've, as they say, dug their well before they were thirsty. They have the opportunities there so that when there is development opportunities, whether it's in residential, retail, or industrial, they're able to take advantage of those markets. And in the meantime, we get to have the growth of a regular earnings stream.
Okay, your next idea, RioCan REIT, a classic play in retail.
Indeed, yes, and this is our value pick. We think this is really interesting opportunity right now for RioCan in that, frankly, they kind of lost their way for a little bit. They got a little too focused on apartment development and adding, additional risk when really that wasn't their core strength. But their core strength is they manage really good urban retail centers, and they've restructured some of their management team. They've restructured their staff. They're announced that they're going to be selling their apartment portfolio and farming off those developments. And it's not like there isn't a development opportunity, but really it should be done by an apartment expert, not a retail expert. Mm-hmm. And that refocus we really like. And especially their debt's a little high, so that's going to be able to come down as they sell some of these apartments. And we think that will be reflected in the price. And we're actually, this is our top pick right now in the REIT sector for this year.
And their top pick in the REIT sector. And then finally, a smaller REIT, not that well known, but with a yield of almost 9%. Why do you like Pro REIT?
Yeah, we often get calls for these small cap REITs, and we have to, be careful about how much money we put into a small cap and be quite discerning. And Pro REIT is our pick of the small cap REITs, and it is a higher yield, as you've said, almost 9%. However, we think this is a very high quality, even smaller organization, has a large Atlantic Canada portfolio, a lot of industrial properties that really aren't so dependent on international trade being there in the Maritimes, but more focused on local businesses and really offering a stable payout. It's well managed, and this is a nice opportunity. Some people do need the higher yield, and it's nice to find one that doesn't come with a higher risk as well. We think that this is a good opportunity for Pro REIT at this time.
It's interesting. Yeah. Do you worry? I mean, with a smaller cap REIT, obviously liquidity can be a problem. Is the trading volume enough to keep you keen on Pro REIT?
For us, it's once we got in, we were just holding. So we're happy to hold this for a long period of time. And when it comes to smaller names, an easy rule of thumb is sometimes they have a little bit too much debt, you would say, or sometimes a little payout ratio is a little bit high. We'll take one or the other. So if a company has high debt and a high payout ratio, it's best to avoid because that's too much risk. But sometimes it does have a slightly higher payout ratio, but the balance sheet is fine. And that's a bit the case, even though the payout ratio isn't too high with Pro REIT, it's manageable. Mm-hmm. And so, we think that's, in that case, you're being rewarded for the yield that you're receiving. And in our position, we do have a couple of these small cap REITs. We would have Pro REIT, we have Flagship REIT, and we have BSR. The latter two being owners of U.S. real estate. Apartments and mobile home communities, and so that's the limit kind of our small cap exposure. The rest seems to be more mid or large cap.
And just comment to us, if you would, what about public valuations of real estate versus private in the private market? Are you seeing any divergence right now? We only have about a minute left.
Yeah. So, and that's what we monitor a lot. We are connected to, we are partially owned by Morguard Corporation. So we do get access to a lot of the kind of data of how the property markets are being focused. And often there is a big split between where buildings are trading and the stocks are trading. And I would just highlight that right now that's most obvious in the apartments. So apartments are freely trading. Lots of wealthy families buying apartment buildings, and it's a great way to keep a storehouse of wealth. And yet the REITs are trading at quite the discount to this very visible, very real evaluation. And so that's one of the things that gives us the confidence to hold well-located apartment buildings in the shape of REITs.
Thank you very much for joining us today, Derek.
My pleasure. Thank you.
Okay, we're out of time. Remember, tune in Tuesday. We've got Michael Decter joining us as a guest on Market Call. It feels like a while since he's been on. Have a wonderful weekend, everybody.